Instructor moves on to the formation of the life insurance contract. The life insurance application has 3 parts. Part 1 covers basic facts, like the applicant's name, date of birth, and social security number. Part 2 deals with the applicant's medical history, including questions about diagnoses, treatments, and current medications. Part 3 is the agent's statement, where the agent can provide additional insights to the underwriter. For instance, if the agent observes the client using tobacco products after the client denies tobacco use on the application, the agent can request a nicotine test in this section. Instructor discusses the conditional receipt. When I meet with Pearl to complete the application, I'll have her sign it and give her a conditional receipt in exchange for her premium payment. The conditional receipt states that if Pearl is found to be insurable at the rate classification applied for, her coverage is effective on the application date. Instructor reviews the elements of a valid contract. For the policy to be valid, it must have the elements of a valid contract, which we remember with the acronym CALC: consideration, agreement, offer and acceptance, legal purpose, and competent parties. Instructor explains the concept of the binding receipt. Some insurers use a binding receipt instead of a conditional receipt. The binding receipt provides temporary coverage for 30 to 60 days, even if the applicant is later found to be uninsurable. Insurers are willing to take this risk because the chances of the insured dying during this short period are low. After the underwriting is completed, if the insured is deemed uninsurable, the temporary coverage ends. However, most insurers today use conditional receipts rather than binding receipts. Instructor discusses policy delivery. When delivering the policy, it's best to do so in person so you can explain the policy, answer questions, and ask for referrals. If you mail the policy instead, send it certified or registered mail so you have proof of the date the policy owner received it. This is important because the 10-day free look period starts when the policy owner receives the policy. Instructor explains amended or modified policies. Sometimes, an application for a preferred rate might come back with a standard rate instead. In this case, the policy has been amended or modified, and the client will need to pay a higher premium for the standard rating. The client can choose to accept the amended policy or reject it. Instructor discusses prepaid versus non-prepaid premiums. If Pearl gives me a check for the first 3 months of premiums with her application, that's a prepaid premium. Having a prepaid premium is important because it serves as the consideration needed to form a valid contract. If Pearl is insurable as applied for, the contract is effective on the application date. Instructor moves on to variable life insurance and annuities. To sell variable products, an agent must have a FINRA registration. Variable life insurance and annuities invest the policy's cash value in the stock or bond markets. Variable life policies can have either scheduled or flexible premiums. A scheduled premium policy requires the policy owner to pay a set amount on a regular basis, like monthly or quarterly. In return, the insurer guarantees a minimum death benefit. However, the insurer does not guarantee any cash value because the investments may perform poorly, and that risk falls on the policy owner. Instructor compares variable life to other policy types. With variable life, the policy owner chooses how to allocate the cash value from a menu of investment options. they can make periodic changes to their investment allocations. In contrast, with universal life and whole life, the insurer makes the investment decisions and offers guarantees on the cash value growth. Variable life is better suited for clients who are comfortable with investment risk, while universal life and whole life appeal to those who prefer more certainty. Great job on completing this video. Now it's time to test your comprehension of the concepts we just discussed. This video corresponds to ICAP quiz course number 34. Remember that number. Click the link in the comments section to access the Insurance Class Assistance Program, also known as ICAP. Once you're there, look for quiz course number 34. This quiz will help us see if you truly understand the material and are prepared to move on to the next video. Don't forget, ICAP quiz course number 34. Good luck and keep up the great work.